A lot of stress for financial market participants to absorb. We'd had hoped that early in November, all the South African risks, once we're past that, we would get some relief, particularly in our Thanksgiving week. But obviously, the new variant Omicron now overshadows everything. Aggressive market sell-offs on Friday, equities falling aggressively, the oil market really coming down very sharply, losses in commodity markets. Rand leading a charge weaker in most emerging market currencies, only the safe havens, yen, Swissy actually doing well. Some safe haven plays coming through in the bond markets, safe haven plays, but also the possible economic consequences of the variant. So an economic slowdown implies less pressure potentially for the central banks to hike rates. So interest rate curves coming down, but led by the US, but here in South Africa as well. Obviously worried about the new variant. So where do we stand on the new variant? Well, it's still very early days. Everyone's still trying to get their heads around it. The World Health Organization has classified it as a variant of concern. Certainly that seems correct. They've noted that it has a high transmissibility. Okay, so probably, this new variant Omicron will now supplant Delta, not just in South Africa, but throughout the world. Okay, it will spread faster. It will outcompete Delta. Already evidence of that here in South Africa. Travel bans restricting travel to and from South Africa will slow that process, but can't stop it. Already outbreaks of Omicron in various countries, Europe, Hong Kong, etc. So it's already spreading. Presumably it's now gonna spread worldwide and become the dominant variant if what people are saying about the transmissibility is correct. Now the concern on top of that is that the current vaccines may be less effective against Omicron. That's because of the mutations, record 32 number of mutations on the spike protein alone. My understanding is that reduces the ability of the vaccines to meld with the spike protein. So probably reducing the effectiveness of the vaccines. Vaccine manufacturers at the moment are already doing in vitro, so in the lab studies of the variant and how effective the vaccine is going to be. Apparently that can take around 2 weeks, and in 2 weeks, hopefully, or over the next 2 weeks, start to get some lab evidence of that. Real world evidence will presumably take much longer. The big unknown, of course, is how serious is the new variant. Is it going to be more deadly, less deadly? Obviously, if it can evade the vaccines, it transmits it higher and is more serious, then we can have a serious global concern. And that's really what global markets are falling on. Certainly, though, would not take us back to a February 2020 type scenario. Just my reading is the vaccine manufacturers, particularly the mRNA vaccines, can be rapidly changed to target a new variant. So it would certainly put us back, requiring new vaccinations, etc. Terrible scenario, but it wouldn't imply another 6 months before a new vaccine, possibly another month or 2 months, whatever it is, before vaccines that are effective against the new strain could be implemented. Also, the new French vaccine that is still being trialed, apparently the way it's constructed would be fairly effective against a mutated variant. At least they hope so. So it's worst case is not really back to February 2020, but although still pretty serious. There's also even a possibility that we could have a positive move here. If you get a variant that transmits faster but is significantly less serious, then if it spreads globally, could actually reduce the effects of COVID from an economic and a humanitarian perspective. It's going to take a while to see these different issues, looking from the reports from the vaccine studies, as I say, 2 weeks. The deadliness, the seriousness, I guess we'll get reports over the next 2 weeks as well, but probably going to take longer to have some clarity on that. So in the moment, what's the world going to watch? What world market's going to watch? Vaccine cases, vaccine numbers from South Africa. Suddenly the new hot data released to affect global financial markets. So far, it's certainly been worrying. 10, 11 days ago, South Africa had 250 cases per day. Now we're running at 2,500 cases per day. So certainly signs of that very high transmissibility. Fallouts in South African financial markets. The Rand was the big one, shooting through 16, trading well into the 1630s. Very volatile day on Friday. Our export clients making the most of it, coming in very aggressively. A lot of structures being used. Export collars looking very good as vols increase. Various structures being used. Tougher, obviously, for importers. So far, we've seen them mostly holding off. No panic evident there, but that's good to see. Hoping that some of this instability settles, the dollar rand pulls back. With vols higher, it is an expensive time for importers to hedge, but perhaps or probably necessary given tail risks that we could get another run on the rand. Parts looking okay, more expensive than they were, but not super expensive. We have seen a pullback in our FRA rates, so making it cheaper for lots of our corporate clients who've been wanting to hedge interest rates. However, the pullback has not been great enough, I think, to really justify using the swaps. Still looks expensive in my opinion. So clients probably better off still looking at the alternative structures that we have been presenting. Variant and the news, SA case numbers going to drive markets this coming week. But as I said, there's a lot of other things to impact markets. Okay, non-farm payrolls on Friday. Big one as always, arguably overshadowed these days by actual US CPI figures. But anything that's showing a tight US labor force is going to worry financial markets. We get Eurozone CPI figures earlier in the week. US inflation already at 6.2, Eurozone going up to the mid fours, so still accelerating there, very worrying. Local data that I'll be watching is our trade balance for October. South African export prices have been coming off, and that's going to see us record smaller trade surpluses. How much smaller will this come through in the data? To me, a fundamental negative for the rand. What's going on there? But we'll just get some firm evidence on the size of the trade account. Fed speakers remain very important. Market looking to see about talk of accelerating the taper at the December Fed meeting. Powell speaks 3 times this week. One of his testimonies will just be a repetition on Wednesday. ECB up there as well. What's the ECB thinking in terms of tightening? Admittedly, things are a little bit overshadowed by Omicron, but still will be of interest. PMI figures, so survey business sentiment, expected to be slowly picking up after Delta wave globally, offsetting the concerns over accelerated inflation. OPEC meets on Thursday, along with its allies, so particularly Russia. They've got to agree on what they're going to do on production. The idea that there's a slow return of the production they cut back in the heart of the COVID troubles. But a bit of grumbling out of OPEC. US and others have released their strategic oil reserves. So some grumbling that OPEC and its allies may not need to increase production. That would be politically very sensitive move, but they have been given some cover now by the variant outbreak. Overall, a big week. Still stress in the markets, particularly here in South Africa. Watching the case numbers, any news information about Omicron, but again, a lot of other things to watch in the week. Good luck for the week ahead.